Prospective financial information, and other assurance services. Assurance engagement may relate to examination of subject matters other than examination of financial statements. For example, it may relate to prospective financial information or to provide assurance regarding non-financial matters like design and operation of internal control in entity. The level of assurance provided by standards on assurance engagements is moderate. Following SAEs have been issued. SAE 3400, Examination of Prospective Financial Information. SAE 3402, Assurance Reports on Controls at a Service Organization. SAE 3420, Assurance Engagements to report on the compilation of pro forma financial information included in a prospectus. SAE 3400, Examination of Prospective Financial Information. This SAE provides guidance on engagements to examine prospective financial information, including examination procedures for best estimate and hypothetical assumptions. Examination of prospective financial information need not necessarily performed by statutory auditor of entity. That means anyone can do. What is prospective financial information? Prospective financial information is financial information based on assumptions about events that may occur in the future and possible actions by entity. Prospective financial information can be in the form of forecast, projections, or combination of both. Forecast. Forecast means prospective financial information prepared on the basis of assumptions about future events and actions which management expects to take place, that is best estimate. Projection. Projection means prospective financial information prepared on the basis of hypothetical assumptions about future events and management actions which are not necessarily expected to take place, or a mixture of best estimate and hypothetical assumptions. So a mixture of best estimate and hypothetical assumptions can be a projection. Management is responsible for preparation and presentation of prospective financial information, including identification and disclosure of prospective financial information, explaining basis of forecast and underlying assumptions. Can professional accountants be associated with prospective financial information? As per Clause 3 of Second Schedule to CA Act 1949 states that a CA in practice shall be deemed to be guilty of professional misconduct if he permits his name or name of his firm to be used in connection with estimate of earnings contingent upon future transactions in a manner which may lead to the belief that he vouches for accuracy of forecast. Above clause does not preclude CA from associating his name with prospective financial information. CA can participate in preparation of forecast and can review them, provided he indicates clearly in his report sources of information, basis of forecast, and major assumptions made in arriving at forecast, and he does not vouch for accuracy of forecast. Same also applies to projections. Duties of auditors who is examining the prospective financial information. Auditor should obtain sufficient appropriate evidence as to whether management's best estimate assumptions are reasonable, and in case of hypothetical assumptions they are consistent with the purpose of information. Prospective financial information is properly prepared on basis of assumptions. Prospective financial information is properly presented and all material assumptions are adequately disclosed. Prospective financial information is prepared on consistent basis with historical financial statements. Precautions to be taken by auditor before accepting such an engagement. Auditor shall consider following before accepting engagement to examine prospective financial information. Intended use of information, whether information will be for general or limited distribution. Nature of assumptions, whether they are best estimate or hypothetical. Period covered by information. Elements to be included in the information. Auditor shall not accept or withdraw from the engagement when assumptions are clearly unrealistic or when he believes that prospective financial information will be inappropriate for intended use. Examination procedures, presentation and disclosures. Examination procedures. Following matters shall be considered in determining nature, timing, extent of examination procedures. Knowledge obtained during any previous engagements, management's competence regarding preparation of prospective financial information, a likelihood of material misstatements, extent to which prospective financial information is affected by management judgment, source of information considered by the management to support assumptions, stability of entity's business, engagement team's experience with the business and industry in which entity operates. Presentation and disclosure. When assessing presentation and disclosure of prospective financial information and underlying assumptions, it needs to be considered whether presentation of prospective financial information is informative and not misleading. Accounting policies are clearly disclosed in notes to prospective financial information. Assumptions are adequately disclosed in notes to prospective financial information. That is, assumptions may be of two types: best estimate assumptions, hypothetical assumptions. Date as of which prospective financial information was prepared is disclosed. Basis of establishing points in a range is clearly indicated, and range is not selected in biased manner. If there is a change in accounting policy, whether reason for change and effect of such change on prospective financial information is adequately disclosed or not. A report on examination of prospective financial information. A report for examination of prospective financial information shall contain following: title, addressee, identification of a prospective financial information, a reference to standards on assurance engagements applicable to examination of prospective financial information, statement that management is responsible for preparation of prospective financial information, including assumptions, a reference to intended use, restricted distribution, and inappropriateness of prospective financial information for other purposes. Statement that examination procedures included examination on a test basis. Statement of negative assurance as to whether assumptions provide a reasonable basis for prospective financial information. Opinion as to whether prospective financial information is properly prepared on basis of assumptions. Appropriate caveats concerning achievability of results indicated by prospective financial information. Date of report, data on which procedures have been completed, place of signature and signature. Modified opinions. If presentation and disclosure of prospective financial information is not adequate, qualified or adverse opinion shall be given, or withdrawal from the engagement shall be made. If assumptions do not provide reasonable basis for prospective financial information, adverse opinion shall be given, or withdrawal from the engagement shall be made. If there is a scope limitation, disclaimer of opinion shall be given, or withdrawal from the engagement shall be made. Next, SAE 3402, Assurance Reports on Controls at a Service Organization. SAE 3402 deals with assurance engagements undertaken by CA in practice to provide a report on internal controls at a service organization for use by user entities and their auditors, that is, user auditors. It complements SA 402 in that reports prepared as per this SAE are capable of providing appropriate evidence under SA 402. Why controls of a service organization are important to a user entity's internal controls relating to financial reporting. Example, a company has outsourced its payroll processing functions to a service organization. The service organization is responsible for accurate preparation of payrolls and timely remittance of dues to government on behalf of the company. Payroll processing service organizations controls relating to timely remittance of payroll deductions to government may be relevant to the company user entity, as late remittances could result in interest and penalties, resulting in liabilities for user entity. Type 1 report, Type 2 report. Type 1 report, a report on description and design of controls at a service organization on specified date. Type 2 report, a report on description, design, and operating effectiveness of the controls at a service organization throughout specified period. Objectives of service auditor as per SA 3402. To obtain reasonable assurance about service organization's description of its system fairly presents the system as designed and implemented throughout specified period or specified date. Controls related to control objectives stated in service organization's description of a system were suitably designed throughout the specified period or specified date, were included in scope, controls operated effectively to provide reasonable assurance that control objectives were achieved throughout specified period, to report on matters above matters as per service auditor's findings. These are the objectives of service auditor. How such an engagement is proceeded with. Service auditor ordinarily performs following procedures: compliance with ethical requirements, including independence, determination of management and those charged with the governance, and communication with them, acceptance and changes in terms of engagement, determination of materiality, obtaining understanding of service organization systems, obtaining evidence regarding description and design of control, obtaining evidence regarding operating effectiveness of the control in case of type 2 report, understanding internal audit function, asking for written representations. Written representations. Service auditor shall request service organization to provide written representations that reaffirm the assertion accompanying description of system. It has provided a service auditor with all relevant information and access. It has disclosed following to service auditor if they aware any fraud or non-compliance with the laws and regulations attributable to service organization that may affect user entities, design deficiencies in internal controls, instances where controls have not operated as described, any subsequent events that could have significant effect on service auditor's report. The service auditor's report. The service auditor's assurance report shall include the following basic elements. Title that clearly indicates the report is an independent service auditor's assurance report. Addressee, identification of service auditors, description of its system and assertions, identification of criteria and parties specifying control objectives, statement that report is intended only for user entities and their auditors, statement that service organization is responsible for preparing description of its systems, providing services covered by service organization's description of its systems, stating control objectives and designing and implementing controls to achieve control objectives. Statement that service auditor's responsibility is to express opinion on service organization's description, design of control, and operating effectiveness of these controls. Statement that engagement was performed as per SAE 3402. Summary of service auditors procedures to obtain reasonable assurance. Statement of limitation of controls. Service auditor's opinion expressed in positive form. Date of report. Signature. Place of signature. Modified opinions. If service auditor concludes that service organization's description does not fairly present the system as designed and implemented, controls related to control objectives were not suitably designed. In case of type 2 report, controls tested did not operate effectively, he is unable to obtain sufficient appropriate evidence. In above cases, opinion shall be modified and report shall contain a clear description of reasons for modification. Next, SAE 3420. Assurance engagements to report on compilation of pro forma financial information included in a prospectus. SAE 3420 deals with reasonable assurance engagements undertaken by the practitioner to report on compilation of pro forma financial information included in a prospectus. It applies where such reporting is required by securities law or regulation. Meaning and significance of pro forma financial information. Pro forma financial information refers to financial information shown with adjustments to illustrate impact of transaction on unadjusted financial information as if transaction had been undertaken at an earlier date. Pro forma financial information is used in offer documents to demonstrate effect of transaction on financial statements of a company as if those transactions had occurred at earlier date. Purpose of pro forma financial information is solely to illustrate impact of a significant transaction on unadjusted financial information of the entity as if transaction had been undertaken at earlier date. This is achieved by applying pro forma adjustments to unadjusted financial information. Pro forma financial information does not represent entity's actual financial position. Compilation of pro forma financial information. Steps involved in this process include identifying source of unadjusted financial information to be used in compiling pro forma financial information and extracting unadjusted financial information from that source, making pro forma adjustments to unadjusted financial information, presenting the resulting pro forma financial information with the disclosures. Practitioner has no responsibility to compile pro forma financial information. Such a responsibility rests with a responsible party. Practitioner's sole responsibility is to report on whether pro forma financial information is compiled by a responsible party on basis of applicable criteria. Engagement acceptance. Before accepting engagement, practitioner shall determine that he has capabilities and competence to perform engagement, determine that applicable criteria are suitable, and pro forma financial information will not be misleading, evaluate wording of opinion prescribed by relevant law or regulation to determine that he will be able to express the opinion as per this SAE, obtain agreement of a responsible party that it acknowledges and understand its responsibility for adequately disclosing applicable criteria to intended users, compiling pro forma financial information on basis of applicable criteria, provide the practitioner access to all information to evaluate pro forma financial information is compiled on basis of applicable criteria, and provide access to any additional information that practitioner request, and provide unrestricted access to those within entity from whom practitioner can obtain evidence. Planning and performing the engagement. In planning and performing the engagement, practitioner shall assess whether applicable criteria are suitable, consider materiality for evaluating whether pro forma financial information has been compiled on basis of applicable criteria, understanding of how the responsible party has compiled pro forma financial information, obtain evidence about appropriateness of source from which unadjusted financial information is extracted, determine whether responsible party has appropriately extracted unadjusted financial information, obtain evidence about appropriateness of pro forma adjustments. Pro forma adjustments include adjustments to unadjusted financial information that illustrates impact of significant transaction as if the transaction had undertaken at earlier date. Adjustments to unadjusted financial information that are necessary for pro forma financial information to be compiled on consistent basis with applicable financial reporting framework on reporting entity reporting entity. Evaluate presentation of a pro forma financial information, read other information included in the prospectus to identify material inconsistencies with the pro forma financial information, obtain written representations from a responsible party that in compiling pro forma financial information, a responsible party has identified all appropriate pro forma adjustments and pro forma financial information has been compiled on basis of applicable criteria. Opinion. Unmodified opinion. Practitioner shall express an unmodified opinion when practitioner concludes that pro forma financial information has been compiled by responsible party on the basis of applicable criteria. Modified opinion. If law or regulation permits publication of prospectus containing modified opinion regarding pro forma financial information and practitioner determines that a modified opinion is appropriate, he shall issue a modified opinion. If law or regulation does not permit publication of prospectus containing modified opinion regarding pro forma financial information, practitioner shall discuss the matter with a responsible party. If responsible party does not make necessary changes, practitioner shall withdraw from the engagement or take legal advice. The practitioner's report shall include following basic elements. Title that clearly indicates that a report is an independent assurance report. Addressee, introductory paragraphs that identify pro forma financial information, source from which unadjusted financial information is extracted, period covered, and date of pro forma financial information, and reference to applicable criteria on basis of which responsible party has performed compilation of pro forma financial information, statement that a responsible party is responsible for compiling pro forma financial information on basis of applicable criteria, description of practitioner's responsibilities, statement that engagement was performed as per SAE 3420, practitioner's opinion, practitioner's signature, date of report, place of signature. These are the contents in practitioner's report.